Yo, what's going on, everybody? Thanks for tuning back in to another video. I'm just going to kind of dive right into it. This one is going to be on RSI, or Relative Strength Index. And basically, there are a couple types of different indicators that we can use as a trader or as a long-term hodler in the crypto space. And one of them is RSI and another one is moving averages. So as you can see, I have an exponential moving average on screen here. A moving average is generally looked at as a lagging indicator, and the RSI is very generally, air quotes here, looked at as a leading indicator. And basically the EMA will look at whatever period you have. So I have a 9-period EMA. So it's looking at 9 candles and it's averaging the price movement within those candles. And it's actually weighting, since this is an EMA, it's weighting the more recent candles heavier. But that's looking at past results and kind of giving you an idea of how the market might play out in the future. So that more or less is you're looking at that as a lagging indicator, whereas the RSI tries to predict the future price movements. And you can do that in a couple ways. Like, some more advanced traders will say, like, you have to change a couple things on the RSI to make it a little more of a leading indicator, but we'll just stick to the good old RSI. I could have done a PowerPoint and made it all fancy and pretty, but I saved myself some time, saved you some headache, and I'm just going to look at a nice one done by Investopedia. So Relative Strength Index is a momentum indicator that's developed and noted, or was developed by noted technical analysis Wes Wilder, that compares the magnitude of recent gains and losses over a specified time period to measure the speed and the change of price movements of a security. So it's primarily used to identify an overbought or an oversold security, right? So basically, we have this is our RSI. If you want to know how to get to it, you just click indicators up here and you click RSI and you'll click on Relative Strength Index and it will populate in the bottom half of your screen here. So if you can see that, it ranges from 0 to 100. Now, I know it doesn't show 100 and doesn't show 0. It's because it moves with the chart. So that's one thing. But generally speaking, this bluish or purplish region here is like the healthy region of RSI, okay? And that's between 70 and 30. So when, generally speaking, most traders and technical analysis will say below 30, you're looking at an oversold situation, which means that the price has dropped so much that there should be bulls coming back into the market. And when you're looking above 70, you're looking at an overbought situation where the market can't sustain itself. It's going a little too crazy, and there's too much buying in a certain given time, and things need to kind of correct themselves. And so that's one way that you can look to use the RSI. And there's two ways to use the RSI, and I'll go over the basic way first. And that is, you can just sort of look in these regions. So when we dropped down to our low point at 6,000, we were sitting at an RSI level of roughly 20. Now, if you were just doing basic RSI trading, you could have looked at this situation and said, okay, I'm going to buy down here at 6,000 because it broke way below the oversold mark, and you bought at 6,000. Then you would be in this healthy range for quite a while and you just hold on to it. And maybe you sold right when it breached that 70 mark, which would be somewhere up in this region around $9,825. So that's one way that you can look to use RSI. And we can see countless times this happens. So like back here, this happened as well. And you would have been able to buy around, we'll just use where the candle closed at 12,700, and then it came all the way back up to about 16,800. Now, this is a feasible way. I think a lot of people do trade like this. But then you can kind of get caught in a trap in some situations too, where this could have very well broken down and never got back to the $16,000 mark, and then you would have been stuck in a Bitcoin bag at 12,500, which wouldn't be the end of the world if you're long-term on Bitcoin, but as a day trader, you're looking to make money. So I don't think that the RSI is like the end-all be-all tool to use solely. I think it should be used in conjunction with other indicators, maybe like moving averages, and look at maybe Elliott waves and look at Bollinger Bands and stuff like that, where you can kind of get a greater idea of, okay, this is a good time. I am confident that the market will rebound and we'll see a healthier RSI. And once it gets into that overbought region, I will sell again. And you would have done well in that situation. Here's a situation where you might not have done as well. If you were purely watching the RSI, you would have seen it drop all the way down to about 18. And then you would never see it come all the way back, and you're sitting at about 9,500, and you wouldn't see it come back into the overbought RSI indicator level until very recently. And that's okay. It depends on the trading term that you're looking to do. So if you're a longer term swing trader, then that might have been fine for you. But another way to look at these RSI indicators is by using bearish and bullish divergence. And this is where it gets a little more complicated, so you might, hang on. But I'll go over the bearish divergence first because we're seeing it right here. And basically what this is where you make a higher high on the Bitcoin chart. So this is your Bitcoin. It's sitting at about 11,000 here. And then we have a little correction, and then we go all the way up to 11,700-ish, right? So you're making a higher high. But you're looking at the RSI indicator and you're seeing a 77, which was at this level. And then it drops at the next level to, 71. So you're making a higher high on the chart, but you're making a lower high on the RSI indicator. And so basically what that is that's bearish divergence. And more or less what happens when you see this in real time, you will see the price continue to fall. And that is exactly what happened. And now we're getting down into the more healthy range for Bitcoin. And, we could see this thing come all the way back down into the oversold mark. And then you might see some bullish divergence. So basically this actually, if you go into I don't want to use this very much for this video. But the next time we found bullish divergence on the 4-hour chart was like back here, which was last year, 2017 in November. So I'll use this for an example real quick, but more or less you have this at 6,000, you had an RSI level of 26. And then, so you made a low, and then you made a lower low. And then you came down to the RSI and you had a low and then a higher low. And so you're sitting at 27 versus your 26. And I know this is very small numbers, so, we can zoom this in. I just lost it. So as you can see, this region here having a higher low and a lower low is bullish divergence. So we're basically looking for our bottom. And what happened then was we launched all the way up to this region, which was about 7,900 from, if you would have bought on the the bullish divergence, you would have bought at 5,800 and you would have sold around 7,900. So that's a really good percentage return. I'll go in and I'll look at the more recent one, which we'll have to look at the 1-hour chart just to give us a more of an idea. And you should be using multiple candle charts just to kind of validate your analysis. So if we zoom in a little bit, kind of hard to see, but right here we're looking at a low and then a higher low from 19 to 24. And at that same rate, we had our Bitcoin value at 67, and then we dropped down to, let's see, what was that, like 6,000? So when we saw this bullish divergence, we could have bought in this region. somewhere in here. And we would have seen at a $6,000 Bitcoin, we wouldn't have seen on the 1 hour chart it rising up into the overbought territory until about here, which was this candle. And that's sitting at 9,100. So you would have made over $3,000 if you bought one Bitcoin down here. So that's the way I like to use the RSI, is I kind of like to go into the deeper candles and get an idea of, you know, are these lining up on different candle terms, and is there bullish or bearish divergence? And I kind of just like to look at it that way. So if this video helped you, leave a like, comment below, and subscribe to the channel. I'm going to be doing more videos like this in the future. I'm going to be going over the Ichimoku cloud. I'm going to be going over exponential moving averages, just all this sort of basic TA stuff that I think can help a lot of people. So if you're following Bitcoin right now, it looks like we're breaking into the oversold territory. So maybe we'll see some bullish divergence here, and we'll see a higher high in the future. So I will be catching you guys in the next video. Later.